Why are Japan's three largest megabanks suddenly joining forces to issue a single unified stablecoin? Because Japan's officially upgrading its entire national payment infrastructure and leaving experimental sandboxes completely behind. Welcome to episode 84 of Japan Digital Asset Weekly. I'm Keisuke, CEO of Wakyodo and the venture partner at Origin Capital. Today, we are kicking off a special two-part series focusing on one of the most monumental shifts in global digital finance. As of June 2026, Japan's stablecoin and tokenized deposit initiatives are accelerating at an unprecedented pace. In part 1, we will deeply explore why Japan's biggest banking titans are collaborating to launch a unified stablecoin, what the reality framework looks like, and what this means for the global blockchain ecosystem. Let's start with the headline that sent shockwaves through the industry. MUFG, SMBC, and Mizuho, Japan's three undisputed megabanks, have reached a basic agreement to establish a joint council. Their objective is to collaboratively issue a stablecoin by March next year. This is not just a private corporate initiative. It has the full aggressive backing of the Japanese government. The Financial Services Agency recently launched a payment infrastructure project. The government officially approved this megabank stablecoin collaboration as the very first supported initiative under this national project. To understand why this is revolutionary, we must look at Japan's advanced regulatory framework. Under the Revised Payment Services Act, stablecoins are legally defined as electronic payment instruments. The megabanks are utilizing a specific highly advantageous category known as Type 3 or Trust-type stablecoins. If you are a standard fund transfer operator in Japan, your digital transactions are strictly capped at the limit of 1 million yen per transaction. However, Trust-type stablecoins have absolutely no remittance limits. They use a trust bank, in this case, Mitsubishi UFJ Trust and Banking, to segregate and protect the underlying fiat assets. This makes them perfectly designed for massive corporate-to-corporate institutional-grade transactions with any friction. The strategic brilliance of this joint issuance lies in interoperability. Historically, banks would issue their own isolated digital currencies, leading to severe fragmentation. By teaming up, these banking giants preventing the fragmentation of digital currencies and creating a unified standard powered by the programmable blockchain infrastructure. The initial rollout will target global cross-border payments for massive trading conglomerates, starting with Mitsubishi Corporation. But the vision does not stop at just corporate payments. These megabanks are also partnering with major Japanese brokerages, including Nomura Holdings and Daiwa Securities, to build an advanced framework where investors can purchase traditional securities directly using stablecoins. The immediate target is money market funds, which invest in short-term government bonds. This is Japan's direct answer to the tokenized MMFs we see rapidly growing in the US, such as BlackRock's Widow Fund. Japan is moving fast to ensure it doesn't fall behind in attracting global investment capital. Furthermore, this massive institutional push is perfectly timed with historic tax reforms. In March 2026, Japan passed legislation to transition the taxation of specific digital assets for individual investors from punitive progressive rate of up to 55% down to a flat 20% separate taxation rate. I want to be absolutely clear here. This 20% flat rate applies strictly to individual retail investors, not corporations. However, this is still a massive catalyst for the entire market. For corporations, Japan has already eased the mark-to-market taxation rules at the end of the fiscal year. The combination of this corporate tax relief and the massive wave of retail liquidity that the 20% tax cut will bring into domestic platforms provides institutional investors with a perfect environment to aggressively integrate digital assets. The megabanks are laying the exact planning required to capture this incoming wave of capital. Here's Wakyodo's take on this development. Japan is executing a highly coordinated national-level strategy to transition from legacy fiat systems to a programmable digital asset economy. For global blockchain infrastructure providers, custody solutions, and foreign financial tech firms, this is the ultimate entry signal. Japan's megabanks are not competing to build walled gardens. They are collaborating to build an open, interoperable, and fully compliant on-chain economy. Next week, in episode 85, we will conclude this series with part 2. We will dive into how tokenized deposits are fully automating corporate accounting and how rural Japan is achieving massive blockchain adoption among senior citizens. If you're a global founder looking to navigate these regulations and partner with Japanese financial titans, you need a strategic guide. Visit wakyodo.co.jp and ask about our Japan Lead as a service. Thanks for watching and see you next Monday.